Hey guys, welcome to Stock Talk with Mike. I wanted to do a check-in and just talk about what's going on with Jumia. It's been a rough couple weeks, and obviously we've seen the share price sell off quite drastically. I think down almost 50% in the last couple weeks since the all-time highs and earlier in the year. But I think honestly, I think a lot of this is much tougher, definitely on new investors that have put most of their new capital to work in the last year or so and have seen nothing but their assets just grow like crazy, and a lot of stocks 2x, 3x and go up, and the market seemed really easy. And I think things are coming down to reality a little bit. We're seeing a hard sell-off, especially across a lot of these high-flying growth stocks. And this, again, I've said this before, but this is completely normal. This is healthy and, very, very typical that we see sell-offs like this in the market. Before we get into Jumia, just to give a little bit of context, keep in mind that the market goes down by about 10% or more once every year, and it goes down by 20% or more once every 4 years, and actually goes down for the entire year overall, 1 out of every 3 years. So the market goes up, obviously, more than it goes down, 2 out of every 3 years, but what you see is it falls a lot harder than it does on the way up. So that's why it seems overly painful. But because the odds are in your favor as far as the market going up, it does not make sense to try and jump in and jump out completely out of the market. You got to sort of lick your wounds and look for spots to continue to accumulate and add to quality businesses. This is the 1 month chart of Jumia. It's down about 47% from the all-time highs earlier this year. And I have to say, I'm just not that concerned about it or that surprised, to be honest. This is a more speculative play, as I've said before. And for me, I've kept it about a 5% or less weighting in my portfolio, expecting it to be extremely volatile until they work some of the kinks out of the system. But this sell-off is not business related, right? This is market related. And obviously we've seen a big sell-off in a lot of the high-flying growth stocks and in speculative plays like Jumia, especially ones that have seen meteoric rises in 2020, right? We just saw astronomical rise in Jumia in 2020. So I think it's a more difficult pill to swallow, obviously, if you just recently became a shareholder of Jumia and have seen your share price come down. Maybe you're in the hole, but for those that have maybe been in it for a while, it's maybe easier to swallow because we just saw such a rise and you're still way up in your position. But for me, I've actually taken some profits along the way with Jumia, been patiently waiting, and now I see it about $33 a share. My price personally, and it has nothing to do for this, it doesn't benefit anyone else, but for me, I go about it pretty methodically. When I take profits to keep that weighting, that allocation appropriate in my portfolio, I like to see a stock fall about 20% below the price I took some profits in to add back those shares. So for me, that price is $31.60. So I have a good till canceled buy order in at $31.60, where I'll be buying more shares if Jumia continues to drop. And maybe that'll hit here next week. Maybe it won't. But I'm good either way. But if by buying those shares, it'll help rebalance it in my portfolio, given that it's sold off harder than the average stock, definitely in my portfolio over the last couple weeks. Taking a step back, looking at the 1 year chart of Jumia, it's still up 1,085%, despite the 47% sell-off off the all-time highs. So no kidding, no surprising we've seen some huge volatility here and a bit of a sell-off, right? I mean, this is a company that's going through a lot of restructuring. We've seen revenues fairly flat over the past year. It's a very speculative play for that reason, yet we've seen the share price go up still over 1,000% in the last year. Revenues have been pretty flat or even slightly down. They've made improvements to their bottom line as far as how deep in the hole from a profit margin perspective, but still highly unprofitable and fairly flat revenues. But that being said, I really like this as a speculative play. I just see this relatively small $3 to $4 billion company being much, much larger several years from now than it is today. It's just a play on the continued growth of Africa, and I just, for a lot of reasons, like it. You look at a company like C Limited or Mercado Libre in other markets, e-commerce markets, and they're executing very well, right? Really high revenue growth, better margins, and they're $100 billion companies, right? So just think if Jumia can start to execute and even tap into a portion of that kind of success, where their market cap and share price could be from here. So again, you got to have a stomach for this kind of stock. You shouldn't, this isn't one of those companies to be questioning why it's dropped 20%, like there's something wrong with the company. This should be no surprise at all. This is going to have volatility in the short term. But what matters in the short term, lots of things can dictate stock share prices, especially for difficult to evaluate on valuation perspective companies like Jumia. But what matters over the long term share price appreciation is execution of the company. So short term, all kinds of things, general market sentiment, etc., can affect share price. Over the long term, almost the only thing that matters for stock price appreciation is execution of the business. And that'll shine through over the long term. And that's why I like finding quality companies or companies I think have good prospects for the future and investing for the long term. A little bit of confidence building for Jumia. I was digging around the 13F filings. So hedge funds and money managers are required to report quarterly on their buys and sells. And that's through a 13F filing. And in Q4, so through October through December, institutions were picking up Jumia. So it's really nice to see that increased institutional ownership. So the number of funds holding Jumia at the end of Q4 were 154 versus just 92 the end of Q3. So it's definitely picking up steam as funds were becoming more aware, I think, of Jumia and its prospects for the future. So in aggregate, new positions and increased positions were 124 in Q4 versus the number of closed or reduced positions was only 45. So that's a net positive of 79 institutions versus just 35 for Q3. So that's really good to see as a really bullish signal for the future that funds are actually accumulating Jumia. So I do think at some point, as we see this big sell-off right now, funds will be looking at accumulating more shares and picking up Jumia. Even the mighty Amazon saw over a 90% share price sell-off during the tech bubble. The mighty Amazon. I mean, obviously they were a much more speculative play at the time, but Jumia is pretty speculative itself right now. So if you're long Jumia, long for this ride with me, hang in there. I hope my order for more shares gets filled this upcoming week and I can have more shares of Jumia, but this is really just par for the course. Hopefully it's not causing you too much stress seeing this share price decrease, and hopefully you can use it as an opportunity potentially to lower your cost basis if you're a fairly new shareholder in Jumia. So thank you so much for watching. If you're new to the channel, please consider subscribing. That'd be great. And it'd be great also if you hit the like button for this video. Talk to you next time. Take care.